After a two-day meeting in Washington, the Fed says it's leaving rates at their current range of 2.25 to 2.5%. Last December, the Federal Reserve estimated that it would raise rates twice in 2019. Now they don't see any more this year. But the Fed chairman says he doesn't see any early signs of a looming financial crisis.
I would say overall, we don't see financial stability vulnerabilities as high. There are some aspects of the financial markets that we're carefully monitoring, and those are in the nature of things that might be amplifiers to a downturn as opposed to a financial stability concern, which might lead to a financial crisis and that kind of thing, which we don't see.
Early trading on Wall Street was flat ahead of the Fed's announcement. But US President Donald Trump's comments about US tariffs on Chinese imports could have been weighing on markets as much as speculation about interest rates.
No, we're not talking about removing them. We're talking about leaving them and for a substantial period of time, because we have to make sure that if we do the deal with China, that China lives by the deal.
With the US-China trade war on pause as negotiations continue next week, the Fed also says it's less optimistic than it was about growth in the US economy. Just 3 months ago, the Fed predicted that the US economy would grow by 2.3%. Now, after a two-day meeting here in Washington, the US Central Bank has cut that estimate down to 2.1%, adding to the gloom of disappointing jobs figures at the start of the month. Giles, Gibson, CGTN, Washington.